The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, everybody, to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft. Once more into the breach do we go, dear friends. As always, we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
And what do we have today? Well, we've got a nice little bounce, 17 points on the S&P cash volume. A little shy of what we probably should have for a 20-point move. Should be probably printing 2.2 billion shares on the NYC consolidated tape. We're doing about 1.9. And again, close enough that if you have a tidal wave of people coming in at the close, volume could be okay, or it could be light. So we'll have to see how this is going to be. The market continues to shake off literally everything from assassinations to a shooting war in Syria. And, man, I always get nervous when nobody else is. And, there's always that part of just because no one's, just because you're paranoid doesn't mean someone's not following you. I've had probably a longer life in trading than 98% of all traders, of at least retail traders. And that's probably because I'm always looking over my shoulder. And I'm always worried when everybody is perma-bullish and very light in the way of looking at short interest. In fact, when you look, I'm going to pull it up here. When you look at Friday, going into the end of the day, let me pull this up here. I wanted to do it. I think we've had the lowest amount of shorts in any market now for about 7 years. But just the individual day on Friday was amazingly low. It was 7.8%, where normally the average is around 12. So we're pretty down far. When things really get nasty, maybe you see 16 or 20 on a huge down day. Of course, that's the day to cover and go long. But we've got just about nobody, including on Friday, wanting to be short. Now, there's going to be a amount of shorts no matter what. Market makers have to go short during the day. Normally, they clean that position up by the end of the night. This is only the amount of shares that were initiated with a short sale or were part of a short sale. But, we were 11% on Thursday, 11% on Wednesday, and almost 11% on Tuesday. And, I'm trying to find if we've really ever had, you go back to the 31st of May as we went into fund buying. We got to 8.6%. But this is even lower than that. And that's why I'm kind of shocked. I was kind of expecting us to be a little higher. But I was also at the same point thinking that the volume would probably be just a shade lower than it is. So we'll see what happens. Of course, this is a lot of things going on. We had a lot of rebalancing on Friday. Today is also the first day of rollover. If we're up today, that means we're probably down tomorrow. And that means you probably bounce on Wednesday. And somewhere around 1 o'clock, 2 o'clock, you're going to find out whether this market has any juice or not. But it's not uncommon to see if we're up today, then we're down the next day, and then we're up in the morning. And then the question is which way this market wants to go. And, volume has kind of picked up a little bit. We're not that far off the highs. We're about 3 points off the S&P highs at 2450 right now. So we'll see how it comes in. But these next 2 days are critical. I'm more than willing to sit in 100% cash other than some intraday trades, as we talked about on Friday. I've been doing a little bit of that again today, just to keep my irons in the fire and my skills sharpened. But other than scalping highly shorted stocks, not a lot to say, at least for a trend, probably until Wednesday, probably around 1 or 2 in the afternoon. So we'll see what we do, but 80% of the time in options expiration, we're going to see tomorrow a pullback, and then Wednesday probably some kind of pop, maybe up to these levels, or whatever the high of the day is. And then we're going to have a real decision as to whether people want to be a pilgrim. As most people know, pilgrims get the arrows. Let's get this show started.
That it's all just a little bit of history repeating.
Hey, what do we got going on here today? Well, it's, we'll get up here. On today in 2012, WikiLeaks chief Julian Assange took refuge in the Ecuador embassy in London, seeking to avoid extradition to Sweden, where he faced questioning about alleged sex crimes. Sweden dropped its inquiry last month, but Assange remains holed up in the Ecuadorian assembly to avoid arrest by British authorities for jumping bail. It looks like one day he will just abscond probably to Ecuador. Ecuador, if you don't know much, they are maybe the most libertarian of countries in the world right now. They want to go to Bitcoin or a Bitcoin-like system for all their cash. They have probably the best laws on private security, and they regularly hire hackers that have been busted to come down and consult for them on making a very resilient country, especially resilient to hackers and other folks. Of course, they have their downside, at least their detractors, mostly get on them because they poo-pooed the Panama paper expose of businesses. But, of course, they have also done some, even if you like some of the things they've done, they've also done fairly bad things like violating the personal security of individuals by publishing their Social Security numbers. And it is medical information, credit card numbers, details of suicide attempts, medical records, all kinds of other sensitive and personal stuff. But, of course, probably no more famous than last year when they decided to go after somebody on the left. They had, for many years, done nothing but go after people on the right. Everybody says that they got their stuff from the Russians. Julian Assange has been on many times saying that it did not come from them. I always thought that all that stuff probably came from somebody that was more than willing to throw a monkey wrench in continued poor treatment by the American government. The Israelis have the technology and probably the technology to make it look like the Russians did it. There are a couple other countries that could have done it too, but we will probably never know. On this day in 2012, they went into house arrest. And what else? We'll be back in a minute and start looking at
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And first one I want to look at out here today is Caterpillar. You can give me a call at 877-927-6648. You can email me at path@tfnn.com, and you can put a message in the den if you would like. We're going to go back and look at some of the usual suspects. Wanted to see how Caterpillar was doing. April 26th, we saw almost 10 million shares at 105.98. We got into that once or twice out here. On Friday, we got out into it at 7.4 million shares, so 2.6 million shares short of the previous high. Went a little higher today on no volume, 1.9 million shares, and pulled back. A lot of volume in the ETFs and indexes, very little volume in a lot of the stocks. What else do we want to look at quick? Apple. Apple, they drove that down exactly where they needed to on Friday for options expiration. As we said, that looked like that's about supported about 145. It went up today, but man, the volume is tepid. Well, we'll see how the end of the day comes in. Let's call it 22 million shares today. And, when we came off the highs on the 9th, that was on 65 million shares. So you've got to bounce. But right now, I think that's all this thing is. My guess is that this thing is going to 125. There may be a drought in the superphone business and coming soon. Samsung is already aggressively selling and pushing some of their phones. I saw where I could get a Samsung 8 for $470 over the weekend for an unlocked phone. And that's very interesting, because that means that they probably have a few extra, probably will be pushing it fairly hard, and Apple's phone will be somewhere around north of 1,000. So there is some fairly interesting action going on, and maybe still buy an iPhone at $1,000. But man, if I had I'm an Android fan already, but man, if I had to pay double for an iPhone, man, that thing better be spectacular when it comes out this fall. So we'll look at that. See what else we have going on out here. Anyway, up on light volume so far. 148 is probably where this thing is going to, and that had 31 million shares on the 14th. You know, you got 21 million shares. Could you get that today? Yeah, maybe by the close, but I don't see a lot out here that doesn't say just about everything for the north side of the price on Apple has come in. In fact, the pattern actually looks like 125, and it will probably take a long time to get there. Our own Citizen Kane of 2017 decided to get into the business of the grocery stores on Friday. This thing spiked to 113.32 today on no volume, 3.5 million shares compared to the 7.6 million shares we saw on the south side of the North End cow. 7.6 million shares. So we're back up to it. We spiked it today and we kind of rolled back down, but there is no juice in that one either. Let's take a look at some of the other ones real quick. Microsoft, little bounce in this one today. Guess what? No volume. 12.8 million shares compared to the 14th that kind of came back on 25.5 million shares, and the 9th that came down on 49 million shares. You're basically into the candle part of that day, and so you're going to be bucking almost 50 million shares against 12.8 million shares. Not a good lookout here. I suspect that most of this market is very much set up like Apple was before it started to roll over. And we can see a few more of these out here. You know, any close on Facebook below the 3x3 would be a big short signal on it. You had a nice pop today. Again, you're back into these big down days. The 9th, 35.5 million shares on the 9th, 13.7 million shares today. So just a one-day washout. Can we go higher? Man, we're going to have to get some big news, I suspect, to get any volume in this market. But, you know, this is kind of setting up just like Apple. You pulled down, you went back up, you had a failure, you went right back up to the top. It lasted for 3 or 4 days, and then it rolled back over. So, yeah, I think we've got some patterns setting up that way. Okay, what else do we have out here? NFLX, Netflix. Okay. Almost all these are setting up the exact same way. You like this probably ideally to be 160, 162 and have no volume in Netflix for that one to roll back over, and then it would be done. It kind of already came back to its sign of strength, which is the 25th of May. What is that? 147, 147 and a half, something like that. 147.30 is that low of the 15th. And you bounced out here. But again, no volume, 3.9 million shares compared to the down day of 10 million shares on the 9th. So, you know, you're coming back up here. The juice isn't all that exciting. You're back over above the 3x3. So you want this thing to kind of climb for a couple of days and then kind of pull back down. If that's it, then you start looking for some big downside targets. On this one, you could go back to about 128. I think that there's some better low-hanging fruit out there, but certainly interesting nonetheless. Okay, what else do we have? Let's take a quick look at Priceline, PCLN. This thing, of course, fell apart on earnings. It's bounced around out here up today on 400,000 shares so far. If we go and look at its day of the 9th, 660,000 shares. So 666, mark of the devil on the 9th. This one's about there already. Of course, it failed a little sooner than many others. I've been waiting for this one to have one more tick down, and this one's actually starting to look rather sweet yet again. Okay. You can call me at 877-927-6648. You can email me at path@tfnn.com. And, of course, put a message in the den. Are there any stocks which your Gartley scanner shows a Gartley right now? That's a good question. We'll show a few Gartley patterns out here. Where's my Gartleys? Okay. We'll see how many of these and what they look like today. Okay. This one was actually from a couple of days ago. This is CTR, Clearbridge Energy, which is a MLP, so I don't like playing it. But it could have been worse on this downside. Wasn't all that exciting. We're going to the break. We got a couple more to look at here. We'll go through a couple of these. Most of these are kind of unknown. The RSX, though, is known. This is the Russian ETF. This one actually doesn't look too bad. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we are back. And what do we got going on here? We were looking at the RSX. I was just thinking, I got up, get a drink during the break, and I bought some oatmeal cookies. I was trying to remember if I ever had a bad oatmeal cookie. It's got the white icing on it, you know, the kind. I think even when they're stale, you can't tell the difference. I think it's impossible to make a bad oatmeal cookie. Anyway, market vectors, Russell out here. Light volume today, but not a bad-looking Gartley pattern out here. I would have liked the energy off this May 2nd high to kind of pull back a little bit, but you did have a little bottom out here. This may be more about energy and a possible bottom in energy than anything else. But we can kind of take a look at it. What is it? XLE. And this $45 range looking like maybe it's some level of support for this. I mean, you're certainly back in to at least a couple of levels in the XLE. So you had 66.18 a low on November 2nd, 65.32 on November 17th. The Baker Hughes numbers, at least there was only one new rig on Friday. There were two new rigs last Friday. So we're getting to the point now where everybody's cutting off additional supply, but still had a lot of juice coming out back here off this December 12th high all the way back down. So to me, again, this one would be best looked at as a sideways action. Let's see what, where's it at? Got to find it here somewhere. I know it's here somewhere. There you go. Okay, dollar's up 38 cents at 97.25, he said. Gold's off $9. I think we had a caller, Thursday or Friday. I didn't like gold much. I just didn't see the risk reward. Maybe we get a reversal in the Fed minutes. That'd be a week from next Wednesday. I just think everybody's probably looking at induced higher rates from their pullbacks. And even though it's just $500 billion at the moment, that may be the long start of additional deflationary pressures in the markets. So crude's off 37 cents, gold's off $9. There just doesn't seem to be a lot out here. Silver's off 15 cents. So what can you say? Copper looked like maybe it had a run in it. It's up 2 cents today, but it's not much. What's natural gas doing? It's off 14 cents. Again, this is heaven and hell, isn't it? But normally you don't find a very diesel tradable bottom in natural gas until August. So we shall see. Let's take a look at some of the other ones that I had on my list. More over here. I want to look at AA. Wanted to see if there was anything out here in the metals. I don't like the way this thing tested the previous April 18th low. Did so on almost 5 million shares on Friday, which is about what we had on that April 18th low. Up today so far on 3 million shares, and it's given a little bit of that back. Not a lot out here. If volume continues to be low, I'm very interested in the CME group with all its market-making capabilities. The market turns south out here. This could lose a huge amount of money in a real hurry. This thing's been going up to the March 1st high of 126.94 that had 2.3 million shares. Today, just 475,000 shares. A couple of days ago, you had 1.6 million shares, but still way short of the 2.3 million shares you saw on April 1st. Energy was not all that exciting on the way up, but it wasn't that exciting on the way down. Again, if we continue to see contraction in volumes, this is one of the first ones that's going to get hit, even if the market holds higher. If we continue to see narrowing ranges. Let's see what we had out here. It was S&P up 16 points at 2449, and just a little over 2 billion shares on the NYSE consolidated tape. See what else we have out here. FTK, which is Flowtech. This is another. I saw a couple of these this morning. That's what got me kind of looking at energy. I think we're a little early out here, but this one looked kind of interesting as it did have a fairly decent low. December 20th, $8.86 with 4.7 million shares. A few days ago on June 8th, this thing had $8.54. So it went below the low, came right back in the next day in the trading range. It's pulled back a little out here, but just 653,000 shares on Friday, and today just 300,000 shares. So at least some low volume. If you're looking for some of these energy stocks, now this is a energy services supplier, would be very interesting to see if these just don't go sideways for a little bit, but doesn't look bad. I've seen a lot worse looking energy stocks out here. This is another one, Godot SAGGB. This is a South American one. Pretty nice low out here on half the volume, May 18th, $2.60 on 22 million shares compared to a couple of days ago at 8 million shares. So you had that. We'll talk about Snap also. Has Congress made it illegal to buy anything Russian? I don't think so. Although they're talking about more sanctions. But I don't think anything has actually been done yet. That would be interesting. We talked about playing Snap. It had quite a little bounce earlier this morning, went all the way down to $17.03, popped to $18.34. That was what I was kind of playing for the intraday trade out here. Got it a couple of times for $0.25 and 50 cents, but nothing to write home about, nothing that you can trade for longer than 30 minutes. I do continue to like the fact that this did go below the previous low of 131 million shares on May 11th, did so with only 18.8 million shares, had a little bounce on Friday. I was hoping to get to that 1834 that we saw today. Apple being kind of crushed, kind of put the little bit of a pale on that trade, although it did end up going the right way. The energy off this 2194 high of May 21st is a little light. Now, is this a great company? No. Is it even an okay company? No. It is a company, though, with half the shares short. So if you're thinking about trading a equity intraday and you get on the right side of this one, I would not be surprised to see this one rip $2, $3, $4 off intraday as it runs shorts on some kind of news soon. And I played it for a little bit. I didn't see any juice come in, so I was out. What else can you say? It will be my go-to stock here for the intraday trade for a while. But, we'll look at a few more out here. Give me a call, 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And what else do we have out here? We'll look at a few others. WAB, as we go into the home stretch. One more segment out here. Wanted to see how this one was challenging the highs. $88.98 on December 5th, 1.7 million shares. What do we have today? 500,000 shares. Before we had about the same, about 500,000 shares on February 16th. You kind of got close on February 26th. You had 1.4 million shares, but this kind of gave it up. So we're back up to this high resistance levels. No juice so far on that one. Weibo, we've been talking about this one for a while. It has closed back over. My guess is you're going to have a couple of days up in a handful of these, and then it's going to be time to probably duplicate Apple's pattern out here. Westport Innovations. This one actually did finally come off the bottom. This one was a big trader for a long time in the den when everybody thought natural gas was actually going to be used for car and vehicles. This thing has finally kind of gotten off the bottom. And even a nice day out here, I'd have to have a pullback, a fairly decent one to get into this thing. But even the worst stocks in the world have their day. This one's bouncing a bit. XME, which is the mining stocks. Of course, gold's still down, but I think this is more about metals and mining, not just gold. Had a nice little low out here on May 4th at 27.97, 6.4 million shares. Got into it with 3.9 million shares on Friday. A little bounce out here today, but again, no juice. What you really have to hate, though, is the way that this thing came down on the 14th and the 15th, and the kind of lack of a bounce out here. But a lot of times these miners like to wash everybody out because the stocks are so thin. We looked at Alcoa, and it's kind of interesting to see no volume down here, but no volume bounce out here today would make me extremely worried that this thing is just going to go down one more time and break through this $28 level. So I'd have to keep an eye out for that. Let's go back and look at a few stocks, maybe from the 15th. Talked about Caterpillar already. Talked about Weibo. What's LHO? Oh, okay. LaSalle Hotel Properties. This one's taking the January 27th high, $31.42, 1.5 million shares. Doing so today with 800,000 shares. So figure 1.1 million shares. This is going to be 400,000 shares light today. I did see some news in this one, or at least in this sector, showing that reservations are down. And that probably is not good for most of these hotel properties. That was the first month that they have been down. So we'll have to check in and see if that becomes some kind of trend. JetBlue, yes, it did. January 11th, $23.15, 6.4 million shares. Got into it on the 14th with 3.58 million shares. Went above it, closed to below it the next day, and it's just been pulling back. The energy off this low from February 8th has been fairly light on the way back up. You've basically gone back, retested the high, and there is not much there. See if there's anything else. TWI, which is Titan International, one of these metal companies, I'm pretty sure. This one had 1 million shares on May 4th, $12.12. Got to $12.18 on June 12th. Hasn't really done much. Kind of pulled back a little bit today. But again, not a lot of juice off this May 18th low, back up to the June 12th high on it. We talked about Weibo already. Let's go back to a few more from last week. Got a request coming in on the IBB. Take a quick look at it today. We haven't talked about it. As I said before, this thing, you either wanted to see it at 303 or 240 to put a position on. This is kind of what I was hoping for to get you out of no man's land. Again, this thing's been in a kind of a big triangle for a while. We're seeing it bust. We're seeing it bust higher on light volume today, just 750,000 shares. Again, you only need 1.3 million shares from that March 2nd high. But even if you go back, it's not too bad. This thing has just been light volume. Normally, when you break out of these, though, over time, the first break of these is to the opposite side. Let's see if I can't draw this up for you all. Okay, let's pop this higher and zoom in and make this a little smaller. We can zoom in. You have really something that looks more like this. And you really are starting to bust out today on the top side. 303.43 or 303.44 is that high. And again, you want to see the volume on this, but any kind of close now below a 3x3 on this thing with continued light volume would signal a retracement. So just very, on this, you kind of have what you want. You're up here, volume's not all that exciting. We'll watch for the close out here. In fact, let's go a little bit farther back out here. This thing is right around resistance levels that it's been at for a while. And of course, some sharp down days. See if there's anything else back out. Okay, that's it. What you don't want to see is light volume tomorrow going into Wednesday and then a pullback. I would suspect a close right now with continued light volume under 295 would signal the short to take you back down to 246, which is November 3rd low. So we'll take a look at that. That's Sony, isn't it? Not Volkswagen. Okay. Somebody's asking about this one. No volume on this one. That's all an ADR, so it's popping around out here. Nice little pop out here today. Volume's 1 million shares. Yeah, I don't know. I don't see a lot in this. Energy's a lot off the leg before. I think you probably got about everything that you want to get on that one. What's GOS? Don't know this one. GOS. Yeah, I got it. Don't know what that one is. We'll be back in a minute. Still have time to give me a call at 877-927-6648. We'll go through a handful of stocks, then it will be the end of the show. You better get on the stick if you want to call. Not much happening today. And options roll over. Tomorrow probably down a little bit. Wednesday morning up a little bit. And then true direction of the market. Stay there.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Well, volume continues to be light. Let me just double that up. Make sure that there's nothing else happening. No, still coming in under 2.2 billion shares as we climb out of this. So it's going to be, unless we have a huge close, going to be a very light volume day. Once again, pushing much higher in the markets. Wanted to look at a couple of stocks here before the end of the show. We'll get to Goldman Sachs in a minute. I had a question about the SMHs. This is where it really gets dangerous again, and I think we've got exactly what we're looking for, and very much for this pattern, which you've had your failure. You're now going to get the retest. If this could get maybe to 86, 87 in the next couple of days, it would probably be time to pull the trigger again. And then this is probably headed back down to somewhere around $77. So there's probably a fairly decent pullback coming in the SMHs. We've already had the first part of that. Now the question is just when this thing, how far this one goes up. But I mean, if you want the proof in the pudding, a 1.6 million share day compared to the 8.9 million share down day on the 9th, we're just hitting the bottom of that candle without the wick, and it's given a little bit back. But resistance should be good here. I'd just love to see one big short squeeze in this thing and maybe give it up that day, and that be it. But I think we've got maybe a day or two out here to continue on. We'll look for at Goldman Sachs for Dave in Germany. Come on. There we go. Goldman Sachs is in this kind of tight range. Again, you're back up to the resistance level that goes from April 25th all the way through May 16th. And what do you have? 2 million shares compared to 3.6 million shares on the 14th. Let's see what else you have out here. I mean, this thing just looks like it's back up against resistance. Doesn't look like anything more than this is in a big trading range from about 230 to 210. So I don't see anything that says this thing's going to break out. And unless volume comes in before the end of the day, this is going to be another test of the top with lighter volume. Again, I think we could see a market turn maybe on Wednesday. And we're at 24.48. Volume's all but stopped. Could they be a little buying and we close back up closer to the highs of the days? Yeah, we could. Tomorrow I'm expecting a little bit of a pullback, a little push back up into this area on Wednesday. And then we're going to find out whether this market has any desire to go higher. So I don't see much in Goldman Sachs. We looked at that. Let's see if there's anything else. I wanted to look at IBM, see if there's anything going on in this one. I continue to worry about this one the most. I think this in the tech sector has the biggest possibility of failure. Went a little higher today, 1.8 million shares. That's compared to 6.2 million shares on Friday. So again, a lot of these stocks out here, if my volume is not broken, this is a day pushing highs and pushing highs once again in light volume. So I mean, not feeling froggy just yet, but I am getting ready to go back and take another swing. We made some money in a couple of sectors short last time. I think these SMHs are probably going to get ready to crack again. Maybe the BBI, and the biotechs, and a handful of others look like maybe they're setting up, maybe a day or two away. In the meantime, sell when you can, not when you have to. Let's see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.